On Tuesday, Exela Technologies confirmed details of the XBP Europe listing for next year. So what does it all mean? Hi again everyone, hope you're all doing really well. So we have just heard what the next phase of the spin-off deal regarding Exela Technologies' XBP Europe business is set to look like. And generally speaking, I think it makes for a more positive reading than what I was initially expecting to come from this transaction a few weeks ago. Basically, in short, the transaction has been confirmed that it will proceed with its next phase with a date of execution occurring sometime in the first half of 2023. The announcement out from the company confirmed more detail, including that the XBP business will enter into a merger with CF Acquisition Corp VIII via a SPAC listing. The stock will initially trade under the ticker symbol CFFE on the Nasdaq, but will eventually be trading under the XBP ticker symbol when the deal is finalised, I suppose to represent the new entity. The announcement has outlined that Exela Technologies will own the majority of the new listed public holding, which is great news for the Exela shareholders as they are not totally relinquishing control of what is quite a productive asset. It sounds like they will be selling off up to 50% of the entity for the transaction via the partner business, which is where the funds the company is raising will come from. Given that the XBP entity has been given an enterprise value of $220 million, Exela Technologies will likely receive in the vicinity of $100 million, depending on how much of the stock they actually sell off at the end of the day. So that is fairly positive for Exela. That's because obviously the proceeds of the sale of these shares will allow Exela Technologies to proceed with the already flagged actions of paying down debt and undertaking a share buyback of their regular stock. In fact, the cash proceeds would give the company enough cash to buy out all outstanding shares in the business, as the company only has a market capitalization of about $24.5 million. Though you would have to think, given that the separating of XBP Europe is going to take away about a fifth of the overall company revenue and the outstanding amounts of debt Exela are carrying in an environment of rising interest rates, some significant action will need to be taken to alleviate this position, and I would expect to see a significant amount of debt paid down as a result. Both which actions will push the share price up and the market cap. In a further plus for Exela, they will be retaining a majority position in the newly listed entity, if I'm reading correctly, which gives them control to a highly liquid asset on their books, i.e. the remaining shares that they hold in XBP Europe. These could be held to continue having exposure to their XBP Europe division, which has been the source of much of their recent contract sales growth in recent times, while also being a potential source of future revenue if they decide to sell the stock later on, if and when there is some further appreciation in the value, which is feasible given that it won't be an entity encumbered with the debt as the remaining Exela stock will be. So generally, I think the fact that they will retain control of the asset is a more positive development for Exela as a company, in my opinion, though I would still like to see more details around all of this. For the new entity, XBP Europe, the new company looks to have an almost clean run ahead of it. It is one of the larger business units from Exela Technologies, and by not being encumbered by the group's massive debts, it really has potential to move and expand at a more rapid rate through Europe, as the company release said. Howard Lutnick, Chairman and CEO of CF Acquisition Corp VIII, stated, "We are excited about this transaction, which will enable XBP Europe to further accelerate its mission to enhance the payments ecosystem across the European continent." So while I think this news was a positive development for the company, Exela is a victim to the increasing intensity of the macro setting around the high inflation rates at the moment. Furthermore, the fears around Credit Suisse and the Bank of England's comments about cutting off support for the bond market in the coming days, as well as the US's next inflation figures set to be posted very shortly, this win for Exela was very much overshadowed. And that was seen in Tuesday's trade when the stock ended a strong 2-day recovery rally and shed 12%. I think the fact that the stock managed to creep up slightly in the aftermarket is a sign that those who watched the stock may be seeing some positivity in this new development. Anyway, I'll leave it at that for this update. What are your thoughts on the XBP Europe listing news? Are you relieved to know that Exela will retain a controlling stake in the business? Where does this put the true value of regular Exela stock in your mind? Let me know your thoughts in the comments below. Until next time, everyone, may the markets trade in your favor. Cheers.